Hello again, fellow BeachBum traders. Welcome to part 2 of our weekly trading game plan for the week of July 25th through July 29th, where we will update our various watch lists for the stocks that we're looking to watch, stocks that we're looking to buy for the week of July 25th through July 29th. If you have not already seen part 1 of our weekly trading game plan for this week, titled Is the Perfect Stock Market Storm Coming?, we would highly recommend that you view part 1, as that contains all the market analysis, our strategies, our themes that we're looking at that go as into the input of selecting our stocks for our watch list for this week. So we'll get started. Again, this is part 2 of our weekly trading game plan for the week of July 25th through July 29th. Firstly, we'll go over some of our updates to some of our trades from last week. Firstly, we got stopped out of our long position in MP Materials. You can see we entered on July 14th at 28.49, got stopped out on the 21st at 29.81 for a nice profit, 4.6% profit, which equates to a monthly ROI of about 20%. And as you'll see, we're going to put MP Materials back on our watch list for next week. And if it comes back down and reaches another support bottom, we'll swing that back up. Also, we got stopped out of our position in UROY, which is Uranium Royalty Corp. We entered that one also on the 14th at 212. We got stopped out at 720 on 721 at 244. Very nice profit, 15% ROI, which equates to a monthly ROI of over 64%. So again, nice profits on both of these swing scalps. Congratulations to our fellow BeachBum traders who also profited from these swing scalp trades on MP and UROI. And again, you'll see we're going to put UROI back on our watch list for another swing scalp this week. Just for your information, we post these real-time alerts. If you want to get real-time alerts, we post them to our Patreon members. You can get email alerts for our real-time trade alerts, buys, sells, stop outs, etc. And we also post them in the appropriate trade alerts channel in our Discord. You can find an invite to our Discord in the description box below, and also from our homepage, etc. So you can see we get Thinkorswim automated alerts here that tells us it reached stop price. And if we actually did get stopped out, then we will update that with the ROI, etc. And the fact we got stopped out. If we make a new buy and it was not based on a Thinkorswim alert, then we would post that in trade alerts, which will also appear based on our Patreon messaging. So if you want to get real-time alerts, join our Patreon, become a Patreon member, and watch the alerts channels in our Discord and or your email. I don't have any specific lessons learned to discuss right now this week, but if I think of something, we can talk about it further. So now we'll jump right into our watch list updates for this week. Again, as you could see in part 1 about the potential for a perfect stock market storm this week, we have a lot of data coming up. GDP data, FOMC decisions, tons of earnings, the potential for, again, a perfect stock market storm, a lot of volatility. So you'll see we're kind of paring down our watch list to the best candidates. So and I'll just quickly go over the changes, and then we'll jump into Webull. We can look at those trades on MP and UROI, and also our changes to our various watch lists. So still got BDRY on. We'll look at that. We're taking Anheuser-Busch off. You'll see it's already ran up. We did set an alert for the earnings on 7/28. We'll keep an eye on the reaction to earnings. If it happens to be irrational, we might take another crack at Bud. DNN, again, another uranium play we're watching. EURL is a Bull 3X leverage ETF on Europe. We'll see in Webull it's run up a little bit. We've talked about our thesis on Euro. We didn't catch it. It did already run up a little bit last week with the recovery of the euro, etc. So also same way with Brazil. This was one recommendation that we found. It's run up a little bit, but we're going to add that to our watch list for this week for a play in Brazil. KOLD is the leverage short on natural gas. As you see, natural gas and oil have been very volatile. Natural gas pushed up into the 8s again. We talked about it a little bit yesterday, and we'll look at the chart a little bit. But essentially, if our position, our strategy on KOLD from a swing scalp standpoint is if it tests its 52-week high, as you can see, if natural gas goes 966 or above, we're going to add a scalping position in KOLD to short natural gas back down. Again, we have a longer term short waiting for natural gas to really come back down, but we'll keep scalping the top off of natural gas using KOLD. Now, if you want to day trade, if you're day trading or momentum trading, and you want to try that volatility in natural gas, you can always short any spike in natural gas using KOLD. And if you get some momentum, then you can long natural gas using BOIL. Again, we're not playing that on a day trade basis, but that is a way that you can do that. And again, this is not financial advice. We're not financial advisors. This is for educational and entertainment purposes only. But we'll give you our opinions and what we're doing, and hopefully that will help you succeed in your trading. We've had Markforged on our watch list for a little while. We're waiting for it to come down. It's a profitable 3D printer we like. So we're just looking for an entry point opportunity in there. Again, we're going to put MP Materials back on our watch list. Hopefully we'll catch a dip and be able to swing MP Materials again. Again, if we get this kind of perfect storm in the markets this week and things plummet, that may open up some attractive opportunities. Pitney Bowes PBI, we're going to take off the watch list. It already ran up. We were unable to catch it. Hopefully some of our fellow BeachBum traders were able to catch that run. It looks like it's starting to turn around. So again, hopefully others have caught that. Same way with SOXL, which is the long in semiconductors. Looks like semiconductors are already swinging back up. We didn't catch that. Hopefully some others have. So we're going to take that off our watch list also. We talked about the opportunity in the euro, and again, we talked about this in part 1 as well and last week, and we saw that drastic dip in the euro, went below parity on the dollar. Thought that was a good opportunity, found this ETF that we could long the dollar, and it did bounce, so it's a little bit above where I'd like it, but we're going to keep an eye on it. If we get that dip back down in the euro, we'll long the euro using ULE. Again, we're going to put UROY back on the watch list for another swing scalp, another crack at it. Had USOI, which is a monthly dividend paying ETN based on oil. It's similar. It's a Credit Suisse one on oil. We have a GLDI and SLVO, which are the gold and silver versions. Always wanted to be able to get USOI as well. If we get another little dip in oil, maybe we'll get a shot at that. You can see it just went ex-dividend. You see it's paying over 22% annual dividend, so very nice dividend. And again, we'll buy a chunk of that if oil dips and USOI dips a little bit. Also, with our ETF spreadsheet, we'll take a look at it. We may actually buy it a little above its bottom just to get that monthly dividend. We've also been watching UUUU for a while. That's another uranium play. Again, we saw in part 1 that uranium was down on Friday, probably pushed down by the XLE, the oil ETF. So if we get an opportunity on some of these uranium plays, we would definitely like to take advantage of that. Then again, we've been watching VTI for it to test its 52-week low again this week with the potential perfect stock market storm. We may just get that big dip in the stock markets that'll give us an entry for a long-term investment in VTI. So, and then we'll talk about Yang and also some of the other ETFs that we found ways to play China. And we'll take a look at where Yang is sitting when we get over to our charts. So again, you can see updates to our watch list. Actually, our Patreons now are getting daily updates to our watch list, and they were communicated to directly. Another method to get daily updates to our watch list, but we also post them in a watch list channel in our Discord that's available to our Patreon members as well. So when we make notable updates to our watch list, we will post them out in this channel in our Discord. Again, you can find an invite to our Discord and how to join our Patreon in the description box below. So now we'll jump over to Webull and we'll look at our watch list. So I'm using the stock screen on the online browser version of Webull. I like this as a quick and easy way to whip through any different types of watch lists. You can have multiple watch lists. So this is where we keep our real-time watch list, our bullpen, our ETFs, etc., and then also some topical topical watch lists. So we'll start with our real-time watch list that we just talked about the updates. And just a reminder, if you're not already using Webull, they're still running their 6 free stocks offer. I don't know how long this will continue, but they started this with their 4th annual birthday, and they're still offering 6 free stocks. If you're not already using Webull, you can open an account, get 2 free stocks, each valued up to $300 each, and then by depositing any amount, even a penny, you can get 4 more fractional stocks valued up to $3,000 each. So if you're not already using Webull, you might as well just get your 6 free stocks. If you don't like the platform for any reason, you can always just cash out your 6 free stocks and take that cash and go somewhere else. It's fine. So now we'll very quickly whip through what's in our watch list. And good morning, Captain Maddie. Yep, coffee is great. I'll take a sip a sec. Thank you for joining us for the live stream. Glad to see you again. Yep, coffee is good. So here's BDRY, which is dry bulk shipping. You can see it had dipped down, caught a nice support. We're just waiting for a little bit of a dip. See if we get a double bottom touch, multiple touches, and then we like to go long BDRY. Again, this is an ETF on dry bulk shipping, so I think it's a little safer than your individual shipping stocks, particularly the Greek guys. So DNN, again, this uranium play we've been watching. You see all these guys, all the uranium plays have kind of run up. They rolled over. We're waiting for them to come back down to get another shot at swinging the uranium plays. EURL is the ETF on Europe we were talking about. You can kind of see where we'd like to catch a bottom. At the last time it bottomed. Again, any kind of bad news in Europe might give us an entry there. Brazil, EWZ, again, ETF on Brazil. So again, you can see, all these guys kind of bounced off their bottom and ran up a little bit. We're just looking to get an entry opportunity. Okay, let's look at KOLD. You can see it's at a 52-week low, but if we were to look at natural gas has not tested its 52-week high, which I think was 966. So although KOLD continues to bottom, we really want to see natural gas test this upper bound before we jump heavy into KOLD. So now, again, a notable point is KOLD is not directly correlated to the price of natural gas. The KOLD is comprised of oil and natural gas, or oil and gas companies. So again, there's an indirect correlation. As natural gas goes up, the stock price of those companies tends to go up, but it's not, again, a direct correlation. And we can look in our ETF spreadsheet if there's a more direct correlation with natural gas. I don't think there is on the short side. Mark Forged, again, profitable 3D printer we're watching. We just want it to come down a little bit. Looks like it is rolling over. MP, you can see if we go back to the 14th, we entered on the 14th near that low. We rode it up. It rolled over on the 21st, broke down through that pivot point. We got stopped out, took our profits, and then you can see it continued down on Friday. So when this guy comes back down, we'll play it again the same way at that price or cheaper. So, and again, that's our primary strategy. You know, when we manually move stops up below these pivot points, below these support and resistant lines. If it rolls over, we take our profits and we'll buy it back, you know, ideally cheaper or at the same level, and we'll ride it back up as it attempts to swing again. ULE, again, this is that euro. You see it bounced and ran up a little bit. So if we get some news, if the dollar strengthens again and pushes the euro down, we'd like to go long on that. UROI, again, that's our uranium play. And similarly, you see we caught it here, rode it up, it broke down, broke through its resistance level. We got stopped out. Now it's rolling down. We'd like it around 211 or cheaper. So again, very nice profitable swings. So here's USOI, that oil ETF. And again, our target is lower, but I may go ahead and buy it somewhere on this 460, 461 level to collect that monthly dividend if it doesn't look like it's going to dip lower. So we'll keep an eye on that guy. But very likely I'll buy a sizable chunk of that on a good dip in oil. UUUU, again, all these uranium plays pretty much have the same shape, but this one's a little bit higher. So we'd like it to come down a bit. And then BTI is quite a bit higher than where we'd like it. If I zoom out to a year, you can see where the previous low was. It's run up as the markets have recovered a little bit. But again, if we get that perfect stock market storm this weekend or this week, maybe we'll get an opportunity to catch a long-term investment in BTI. And we have an order sitting out at that 52-week low. We have a very sizable order sitting right there at that 180, 167 level. So if it ever does dip there, we'll catch it with those orders already in place. I haven't seen Spacula, and that's too bad because I know Yang is one of his favorite plays, and he was asking yesterday about Yang, and you can see Yang's kind of run up. Yang is the short on the Chinese tech stocks. And you could see there was some news. They were finding some of the Chinese tech stocks again. You know, they pulled some people in to talk. The Communist Party pulled some of the executives from tech stocks in. Again, there's all kinds of issues and catalysts for shorting China tech stocks. So that's always our favorite play versus longing them. But in a minute, I'll show you some additional options for longing China stocks if that's the way you want to play it. We'd really like it down around this 10 level. And if I zoom out a little bit farther, we can kind of see it's kind of sitting in the middle right now. So it's a little riskier at this level. And again, those are very volatile on any given day. Either Yang's running up and Yin's running down or vice versa. So again, at 4 a.m., I always take a look and see what the trend looks like it's going to be. And if you want to day trade those, they're great day trading vehicles. Same way with natural gas, etc. And again, that's our message. You know, there's plenty of opportunities to make money in this market, even though it's been a bear market, it's been a choppy market. A lot of the indices have been, you know, pretty much range bound. They're not really breaking out. There's still plenty of opportunities to make money, particularly if you're, day trader, momentum trader. I don't tend to be as nimble as I would like, so I rarely take day trades. Trying to get better, trying to find some opportunities to do that. So now let's talk about our bullpen stocks. If you happen to be new to our channel, the concept of a bullpen are ones that we don't watch real time during the day, but I revisit them at the end of the day. Essentially, as we'll see, I go and I spin through everything in this list of my bullpen stocks and look and see if the setup looks better. If so, we'll put them in the game, move them up to our real-time watch list. Otherwise, I'll just come back and decide whether to remove them at the end of the day. So the first change to our bullpen stocks, we're going to put big lots back in. As we'll see, it looks like it might be rolling over and coming back down. We played big lots before. We like the thesis of discount stores. Given the recession, the high inflation, we think people are going to trade down from higher cost retail to your dollar stores, your discount stores, your, what they call big box, your Costco's, Walmart's, BJ's, Dollar General's, Dollar Trees, all of which have run up quite a bit. So we think there might be an opportunity in that theme again in big lots. So if it comes down, we'll take another shot at big lots. We made some money on it before, and we'll make some money on it again if we get the opportunity. Clicks is this long online short brick and mortar retail. We'll take a look, see if that looks attractive. ECH is a long on Chile that was recommended based on the lithium theme because they have a lot of lithium. So we'll take a look at that. We're going to take Ford off. Ford's already bounced up and broken out. So we're going to let that one go. We're not going to chase Ford. FONR, we're waiting for it to stabilize and give us an opportunity. We had added NVIDIA during this week. And again, our Patreon members got this update to the watch list. We added the NVIDIA on the 19th and thought it might roll over and come down, and then it bounced and turned back up. So I took it back off. I'd love to get a shot at NVIDIA, but we want it at a reasonable price, reasonable value, and it's a little high. So this retail ETF also ran up. We'll see, it's in our spreadsheet. We'll see if we get another opportunity on that. Yesterday, we were talking about treasuries. We were looking at the futures charts of treasuries. I kind of commented I wanted to look at the ETFs for our treasuries, and we'll look at that in a second in our ETF spreadsheet. But I want to put TMF back in the bullpen and keep an eye on it to see if that's a bull leveraged ETF on the 20 years. And as we'll see, if it comes back down to a support level, it may offer a decent risk-reward profile. We're going to take, we moved ULE up to our real-time watch list, as you saw, and we're going to take URNM off. That Sprott your uranium miners ETF. It ran up. It's running higher than the other uranium plays we have, and I know this is a very popular one, so maybe if we are watching some of the less popular uranium plays, they might give us a better opportunity. So now I'll jump over to Webull, and we'll scroll through these guys real quick. Okay, so here's big lots, and I'll zoom in a little closer so we can see. It looks like it might be rolling over, might be coming back down. I'd kind of like it, to come back down to its previous support, but we'll see. It might, turn up before that. We'll keep an eye on it, see if that gives us another opportunity for entry. Here's Clicks, which is that long online retail and short brick and mortar retail. Is very choppy, as you can see. We'd kind of like it lower. So you can see I'd really like it around 33. It's kind of sitting in the middle there right now. Excuse me a sec. ECH, which is the Chile, as I mentioned, kind of a lithium play. You can see it was coming down and then bounced off that support line. It might be rolling over. We'll see if that gives us an opportunity. Good morning, Douglas PC. Thank you for joining us for the live stream. Glad to see you again. We were just talking about treasuries, and I'm right there right now. So I took a look at our treasury ETFs, and we'll see them again in the spreadsheet in a minute. And it looks like this guy, TMF, which is the bull on the 20 years, may present an opportunity. I'd like to see it test this 52-week low. You see it ran up on Friday. We had that kind of risk-off move on the bonds on Friday. So since we know there's a lot of selling pressure, we talked about, we know the Fed's selling bonds. We also know the Chinese and the China and Japan are selling bonds. So there's a lot of selling pressure in the bonds. So again, we talked about this in part one. So, maybe we'll get an opportunity and catch that bottom on the 20 years. The risk reward's not great, as we'll see, so I'm not overly excited about it, but it might present an opportunity. And then we talked about we're going to take this guy off, URNM. As you can see, it's just kind of run up. It's much higher. It never did come back down to where I'd like to see it. So I'll go ahead and take that off. You can see how easy it is to maintain Watchlist at Webull. You just right-click, delete, or you can if I wanted to move something up to a watch list, I can just move it up to my watch list, etc. If I buy it, I can add it to my current position. So yeah, I saw either an article or a video mentioning that about foreign investors buying up U.S. land. That's not really all that new. I know years ago there was comments that the Chinese were buying a bunch of our land, and there was some concern over that. So again, not really not surprising, and not really anything new, given inflation, recession. Real estate tends to be a good hedge against inflation, right? Because the prices tend to go up with inflation. Yeah, to get rid of the U.S. dollars. Yeah, the dollar's strong, so that's driving a lot of activity nowadays. So now we'll talk about our ETFs, and I've been doing a lot of work in these areas to try to find opportunities in other industries, other commodities, other markets. So you'll see I've identified a number of alternate Chinese ways to play China. So I've got a new bear one, and we'll look at the risk reward profiles in the spreadsheet in a second. So I've got this CHAD, which is a bear China. So this would be comparable. It's not as much leverage as Yang, but it would be comparable to a Yang. Then we've got CWeb, which is Bull 2X. I think Douglas PC had recommended that I look at CWeb and KWeb in the past, so finally got around to it. We'll see what their risk-reward profiles look like. Also, with the strength in the dollar, it was recommended to me, I believe, by Easy Mike, who you've heard before. I did chat with him a lot in the Benzinga shows during the day. And he recommended UDN as a way to short the dollar. So I've added that to the spreadsheet. We'll look at the risk-reward profile of it. And again, just a reminder, our Patreon members have read access to this ETF spreadsheet that we'll see in a second. It is under construction. I'm making a lot of changes to it. I'm adding a lot of automation to it. So we can see some of the enhancements I've recently made is now the support and resistance levels are automatically updated at the end of the day from our Microsoft Access database. The bottom and top are also pulled from our Access database and updated in the spreadsheet. If I don't currently have We talked about, last week, I think if I don't have a value for bottom or top, should I leave it to 0 or set it to the 52-week high and low? Right now it's currently set to 0, which is useful. If I see a 0, I know I'm missing a value in my database, so I can go and fill that in, which I was doing right before this live stream. I know nothing about these ETFs. Well, good. I'm glad you find this helpful. I'm using this spreadsheet, and I'll jump over to the spreadsheet again. If you want live real-time access to the spreadsheet, it is available to our Patreon members. I'm also updating in our Discord. We have some Patreon channels in our Discord, so I'm updating them with these enhancements as I make them. So here is that ETF spreadsheet, and again, I'm finding this incredibly useful. So now at the end of the day, I scroll through this. I'm looking for the green highlights, which are risk rewards that are greater than or equal to 2. So that tells me that is the kind of risk reward profile that I want to have, that I want to look at. And you can see there's different levels of risk reward. So the initial one is the price. It's calculating the risk, which is the level of the price above the support. The reward is the level of the price below the resistance. So it's saying, okay, based on that, from the current support level, it's got a risk reward profile of 5 or greater. Then it does it for the 52-week high and low, and then from the support level to the resistance level that I'm using. And again, now these are automatically updated based on the nearest support and nearest resistance level based on the current price. So again, I wrote some C# code. I run an executable at the end of the day. It reads the database and it updates these prices. So I was mentioning, well, specific, so again, you can see, if anybody wants to look at a particular category, please put it in the chat. Or again, if you're watching this video after the fact, you can put it in the comments or in our Discord, etc. But I mentioned these China guys. So we mentioned that we added this CHAD to our ETF spreadsheet as a possible alternative to Yang. But as you can see, the risk-reward profile is much worse. It just doesn't really have a great risk-reward profile. There's one I've got to put a bottom in on Yang. I can assume it's 1007. And then as you can see, it fills in that if I just assume the bottom's 1007. Also, if you want to long China, you can see there are 4 options. Usually we have talked about yen, but you can see there's several of these others are possibly more attractive risk-reward profiles. So we see that the CWEB currently has a risk-reward of 8, and from not quite as good from, or let's see, where's yen? Okay, so yen has a better support to resistance, and it's not above 2, so it's not great. CWEB only has 1.19, but in its current position, it has a better risk-reward profile. So again, 2 different ways you can long China if you wish to do that. There's also this ASHR. And if you want to look at what constitutes those particular ETFs, there's the link to the ETF database profile in the notes field in this spreadsheet. So you can see, okay, what exactly is in that ETF and what are the weightings, etc. And then you can make a choice. There may be some other factors that make you choose one or the other. I agree, Captain Matty, is I'm much more apt to short China, just all the numbers of issues, the potential catalyst for shorting. But again, if you want to day trade, these guys present opportunities to make money. If you want to day trade, momentum trade, etc. Sometimes the long is the play of the day, and sometimes the short is the play of the day. They do move on news, so when the Communist Party, relaxes a little bit on the tech firms, Chinese tech firms. I mean, everybody can't resist jumping into Alibaba when it gets low, and JD and some of these guys. They can't resist. And I won't babble too much about that, but yeah, we've been out of individual Chinese stocks since last fall, and we have no interest in holding any Chinese stocks or Taiwan for that matter, just because of the risks there, or I mean Hong Kong. Taiwan, that's a whole nother story. We'll talk about that another time. Another thing I added, and I can't remember if I put this in the notes. I think I did. Let's see, did I put those guys? Yeah, maybe not. Oh, yeah, I guess I didn't put it in the notes. I added these two guys for coal. These are not actually ETFs. These are individual stocks, but I have not been able to find any ETFs related specifically to coal. And this does present some opportunities from time to time. Money Mitch from Benziga is big on BTU. You'll hear him playing BTU a lot. But I found this other one, NC, which is also a coal company in the same category. I found that just by searching in FinViz under the coal category. And this guy looks like he's got pretty attractive support to resistance, risk reward profile. BTU is looking a little bit better right now. So both of these guys, if you look at them, they're kind of very near a support level. So that might present an opportunity. Might be something you want to take a look at if you want to try to play coal. I talked about, we added this guy, Nib, his Cocoa. Again, these, if you see how in part one, I look at the futures chart. I look for any commodities that have an irrational extreme move, and then I jump over to this ETF spreadsheet, identify, okay, I want to, one of these guys took a dump and I want to long it, so I can jump over and find an ETF quickly to be able to long it. We talked about copper, I think, yesterday with Douglas PC. The primary copper ETF is COPX, but you can see from a near term and even a support resistance level, the risk reward profile isn't that great. From bottom to top, it's pretty good. And what that tells me, that was corn. But what that tells me is I want it to come down. So support resistance is decent. So there's copper. He's not bad. Corn's not so great. But yeah, copper's not too bad. You can see I'd like it to come down to about 20. Ideally. So I'm watching copper. I'd like it to come down farther. We talked about gold, and if Douglas PC, you mentioned a gold royalty company, and if you throw the ticker in the chat, I can search in my database to see if I have it. It must be an individual stock. I don't see it in my ETF spreadsheet. So if you let me know what the ticker is for that gold realty, I'll see if I have it, and if appropriate, I can add it here too. So we talked about natural gas. So here's a couple ways you can play natural gas up: UNG, UNL. And here's a couple, those are all up: Boyle, GAZ, UNG, and there's only one to short. So that's cold is currently the only way I know of shorting natural gas, but you have several different options for longing. Again, UNG, same way we've talked about oil. A couple ways to short oil is DRIP if you want companies, or SCO if you want the direct WTI price. And on the other side, there's Gush and UCO. And then there's USOI. You can see it's a very attractive risk-reward profile right now. And again, I'm more interested in this case in the nice monthly dividend. But we'll take the profit as well. You say it's MTA. So let me look at that in FinBiz a second. Okay. Okay, I'm going to search my database. You won't be able to see this. It's a different application. I don't have it yet. So I will do some research on that guy and see. So it's not an ETF, it's a specific company. So I'll run my research on that and see. Yeah. Yeah, let me look at those. Actually, if you can put the list in the Discord, that'd be great. I can look at those when I get some time. Okay, so is there any other categories? Well, we talked about treasuries. So here's all the treasuries. It's transport. So essentially, I looked at these guys. Here's all the treasuries. Here's the downs, the shorts on treasuries. You see right now, none of them really presented a good risk-reward profile. Some of them are decent support to resistance, but they got to come down. And then on a long side, the two I've got is TMF and TYD. Both of them look pretty decent, but TMF has a little bit better support resistance. So I'd like it to come down to 1050. You can see that's where I drew the line in the charts in Webull. So it's in the bullpen. We'll keep an eye on it. If it comes back down, maybe we'll be able to long the 20 years. You can see this is the 7 to 10 years, so it's a shorter duration. And unfortunately, these don't correlate directly with the futures prices that they show in the FinBiz chart. So you kind of have to look at both and look at the risk-reward profiles to see what presents an opportunity. But again, if we see this major down pressure on treasuries due to the Fed, due to China and Japan, etc., we might get an opportunity in the treasuries. So, and then again, we talked about euros. I've also added several for the Japanese yen, but unfortunately, it hasn't really presented a decent risk-reward profile yet either. So, except shorting it. So, we're looking more for a long. So you can see there's a couple ways you can long the yen, FXY and YCL. So if we get another dip in the yen, we might take a look at this. But again, we're watching this risk-reward profile to see what's attractive. So shopping list, again, really nothing's changed. We've got, earnings. It's going to be very important. We've got major earnings almost every day this week that can cause volatility in whatever sector. If they miss, we get an irrational reaction. That may open up some opportunities for some stuff that you always wanted to buy and put at risk anything, else. So you might want to take profits if something is a sympathy play and if somebody in that sector reports bad earnings, etc. And the key is to be inflation-proof and recession-proof because although inflation may eventually come down, we still have very high inflation, so you want things that are resilient to inflation. And also, since we're headed into a recession, you want things, profitable stocks that have cash. You don't want their debt to be sensitive to interest rates because that can hurt them. You don't want zombie companies. A lot of these cruise lines, airlines, etc. The concept of a zombie company is one that essentially their cash flow can't even cover their debt payments. They have such high debt. So stay away from those because in a major downturn, if their cash flow reduces, they may end up in bankruptcy. So I hope that all helps. I don't know if anybody has any questions. I can entertain some questions for a few minutes. Otherwise, I'd like everybody to vote on the poll if you haven't already done so as to what the best time for these weekly trading game plan live streams is. Again, if you have any questions for any of these upcoming game plans, you can reach out to us via the comments underneath this video. You can join our Discord, post in our Discord, contact us via social media and our Facebook group, etc. Will it go up or down? Any guesses? Well, probably both, but it's going to depend on all this data that we've got coming out this week. You know, first we've got the FOMC decision. We've got, well, and then we've got tons of earnings. So if earnings are better than expected, things are going to go up. If they're worse, they're going to go down. If some of these big companies report or miss in any way or poor guidance, say the wrong thing, they're going to drag the markets down. So there's a lot of, again, the title of part one is the perfect stock market storm coming. We have a number of factors that could combine to create a perfect stock market storm. If we get this dip, hopefully that would give us the capitulation we need. And again, we'd love to go long big on VTI. We'll take advantage of that dip. Good morning, Clean Slate Trades. Thank you for joining us. Yeah, I mean, eventually it's going to bottom and bounce and then head back up. Now, whether it's a quick bounce or a longer bounce, the market's always hit new 52-week highs after a recession bear market dip. And yeah, as we talked about yesterday, all indications are the recent rally was a bear market rally. We haven't tested and broken out of the longer term highs yet, so that's the indication unless something changes. So somebody was asking about TBLT. Oh boy. Yeah, let's look at. I'll look at that. I can almost guess. I heard they've had a number of reverse splits, and they're probably losing a bunch of money. And I know it's one of these day trade fans. Look at that; they're losing a ton of money. Again, this is more of a meme-ish, momentum thing. Eventually, my opinion. Again, this is my opinion. Eventually, it's going to crash because they're losing tons of money. And again, I've heard they had a bunch of reverse splits, and you can see it's been trending way down. Looks like it was almost zero. So this is a penny stock, pump and dump runner, not something you'd want to hold. If you want to day trade it, play the momentum, that's fine. It could have a big run, this guy's not even showing the short percentage. He's just showing the short ratio, but it's very small. So yeah, stuff like that, day trade it. Be careful, get your stop in, don't get killed, because these are going to pump and dump any period of time. They're not going to survive. So yeah, that's my view on stuff like that. So I'm checking for any other questions. Anybody else have any final questions? Again, vote on the poll. Let me know when the best time is for these weekly trading game plans. Again, please join us in our Discord. You can find the invite in the description box below. Also, the links section on our homepage, which is beachbumtrading.com, bum without the U. There's links to all of our social media sites where you can contact us. Links to the invite to our Discord, our Facebook group, etc., and all of the tools and trading platforms that we use. So all the tools that we've used in this video, you can find links to all those, plus even more, and the trading platforms we use and all our social media sites on our homepage, beachbumtrading.com, bum without the U. So again, let us know how else we can help you succeed in your trading career. And we hope you have a great trading week. I know it's potentially going to be pretty tumultuous. We will see. We'll see if we get this perfect stock market storm or not. And as this data comes out, we will try to, again, post it in our Discord to let you all know, and any changes to our watch list, etc., or our strategy. So we hope this all helps. And good luck and have a great trading week.